What's better than earning money from a 9-to-5 job? It's earning money while you sleep, which is made possible if you start investing. You're listening to the Real Estate Investing Demystified with your very own dynamic duo, Ava Benesocky and August Biniaz. Tune in as we discuss everything real estate, both on the passive and active sides. We feature life-changing stories of today's real estate leaders that will help build your own roadmap to success. This is a show that will lead you to a diversified portfolio, a much bigger revenue, and a next-level venture that brings you a smooth cash flow. Let's get this episode started. All right, everybody. Today we're joined by Lee Small, and we're really excited to have him on here. We actually met Lee in Vancouver. We went out for dinner with him for the first time. What an amazing guy. Hey, what a funny guy. I have to say I laughed a lot at that dinner.
Absolutely. I hear Lee Small. I remember my favorite rapper, Biggie Smalls, but there's no...
Also New Yorker, so we're good.
Yeah, no connection there, but yeah, no, absolutely. For all the kids watching this, if you want to, thinking about what you want to be when you grow up, you definitely want to be what Lee is doing, is basically going out for lovely lunches and dinners, so much so that he doesn't even have a chance to go out with his own wife, because he gets taken out so much for lunches and dinners, and his company's expense is one of the greatest jobs out there. So we'll get into all of that.
It's a pretty cool job, guys.
It's a pretty cool job. We feel like it's an important topic to cover as well. It's about title insurance. And yes. I'll get into this briefly here. So obviously we're located here in Canada. We invest in the US. We partner with Canadians and Americans to buy US real estate. But a lot of people watching our show are Canadians who are involved in Canadian real estate. So we don't really have title insurance here in Canada. And the process really is that when a property when a title has been transferred here in Canada, when a property is sold and there's a change of ownership in a property, when that change takes place, nothing can linger on. If there was a builder's lien, if there was some type of a mortgage, if there was anything on the property, after that transfer takes place, nothing can goes on. And it's even, I'll get into this a little bit later on, but even in cases of fraud, nothing can take place because the title has not switched. But in the US, that's not the case, I guess, because of this lingering, potential for litigation or other issues or some form of a, something on the title will linger on to the new owner. So that's why you got to get title insurance, and it's always important to get insurance. And another very important thing about title insurance is that usually you get insurance for something that might happen in the future, right. But title insurance is from anything from the past. Where we'll get Lee to get into it, and maybe you can tell our viewers and listeners a little bit about Lee and Lee's
let me
background.
do a quick introduction about Lee and his background. But one thing I want to mention is there's not a lot of content online about title insurance, so we're really excited to bring a lot of value to people today. But you guys, a little bit about our guest. Lee runs national business development for MBL Title, a title and escrow company based in Dallas, Texas. Lee discusses transactions and industry trends with clients in all commercial asset classes and helps close complex transactions. Lee received his MBA from Pepperdine University and has closed over $1.5 billion in transaction volume during his career. So welcome, our good friend Lee.
Welcome.
Yeah, thank you so much for having me, guys. Great to see you.
Yeah, great to see you too. Absolutely. We can't wait to dive into things. Can you just start off by talking to us about your background and then your start in real estate, please?
Sure. Yeah, my experience is a little bit different than a lot of people who just kind of hopped into real estate. At least a lot of people do here in Texas. I was actually a sports television anchor for 2 local TV stations in the state of Texas for 5 years after graduating undergrad. So I covered a lot of college football, college baseball, college basketball, professional football, Dallas Cowboys, Texas Rangers baseball team. So I had a great time covering sports for 5 years. And that's really all I wanted to do when I was growing up. And through a couple of connections, I ended up getting into oil and gas for a very short period of time in West Texas. And then the oil market unfortunately crashed in 2014. And that kind of was a career reset for me. And so I went back to school at Pepperdine, got my MBA, and moved to Dallas and got into national commercial title insurance. And so here we are 6 years later, still a national title, and things are, Texas, the landscape here for the commercial real estate stuff and really across the Southeast has changed rapidly over that period of time. So excited to be here and talk to you guys about title insurance and why it's important in the whole process.
Amazing. Okay, Lee, so what is title insurance? Why is it needed? And you shared a really great story with us at the dinner that we had in Vancouver. So maybe you can tell
The story that where the title insurance even came, what was the impetus of title insurance?
Sure. So title, and you mentioned this, August, that there's a couple of really interesting things about title. Title is actually one of the rare forms of insurance that was not already over in Europe before America was founded. So it was created here in the United States. It's also the only form of insurance that covers what has already happened. And you might be, takes a second to wrap your head around that because it's such a foreign concept of insurance with car insurance or health insurance. Those are all forward-looking things. Insurance, title insurance in the United States covers what has already happened. So you're saying to yourself, why would I need insurance for something that has already happened? So here's where title insurance comes from. In the late 1800s in Pennsylvania, there was a transaction between two parties. And during the search and exam process, I'll get into more detail what that actually means here in a second, but I'll shorten this story up just to give the history of title. So during the search and exam process of what public records were out for this property, came to be found that there was a lien on the property being sold. The attorney went to get an opinion on that lien and whether or not it was valid. And the opinion came back. They said, no, this lien is not valid. You can proceed with this transaction. It will not affect the buyer of this property. Turns out that was incorrect, in fact. And so this new buyer purchased this property, paid full price, and then it was actually foreclosed on by the county and the sheriff to recoup that lien because that is the collateral for that lien for taxes. So they sold it, and there was nothing left of his property. He had paid full price. They had taken it from him to sell it for this lien that was in fact valid. And basically, as it went through the courts realized that the parties hadn't done anything wrong, but that there needs to be a form of insurance for situations like this that move forward. And it's not just commercial, to be clear. This title insurance is important for single family. I have title insurance on my house. Any lender in the United States, for the most part, this is a broad generalization, but any lender will require title insurance because they need it to protect their collateral, which is the real estate asset. So that's how we got to have title insurance in the United States. It has grown. There are multiple different underwriters, just like you have for life insurance and all these other groups. There are some really big underwriters who will underwrite the actual title insurance. And we're involved in on my side, on the national commercial side, on, as you mentioned, Ava, on any commercial transaction, multifamily, hospitals, industrial, cold storage, self-storage, you name it, manufactured housing, anything that transacts. We also have a whole single family division, which I don't work directly on, but we're involved in any transactional process for real estate in the country.
All right. So title insurance is like a history lesson on that piece.
Yeah.
Yes. Nice. And just for me to add one quick thing here. So in Canada, I guess we're still somewhat archaic, but what happens is that if a situation just like the story you shared takes place here in Canada, I guess the lawyer's errors and omissions comes into effect. And also we have an actual government institution, which is the land title, that does the transfer. So you got the lawyer or a legal person that does the transfer. What are they called? Notary public.
Notary public.
Yes.
Okay, there we go. Awesome. Now, the next question I was going to ask you, and you actually kind of touched on it. You said lenders needs title insurance to protect their collateral. So that was kind of our question: is title insurance a requirement if there's debt financing involved, or by different levels of government, county, state, or federal?
Yeah. So the short answer is yes. Again, there are some rare exceptions where that's not exactly the case, but there are two forms of title insurance. So it's important it's not just the lenders who are wanting it and desire title insurance. There's what we call an owner's policy, which covers the ownership for my house. Exactly. I have the owner's policy, and then there's a lender's policy, which covers the lenders. So if you're, for example, if you are refinancing a property, a multifamily property, and the ownership group is not changing, you only need to purchase a new lender's policy because the ownership group has not changed. If you are transacting and you're selling the property and the new buyer is going to both change, have obviously a different ownership group, and then a lender is going to come on, you will get both policies. However, in the state of Texas, and there's some other across the country, when you package them up, the cost comes down quite a bit on the lender's policy. In Texas, if you do it simultaneously here, you pay for the owner's policy, and then you'll pay $100 just to add on the lender's policy, which is very cheap, but that's because you're packaging them up at the same time. If you're doing a refinance, that doesn't come into place. We have some other refinance R8 credits that come into play, which is too granular for this. If you have real questions, people can reach out to me about specific refinance stuff and how the pricing works, because each state is different in the United States. Okay. But yes, you do typically during a sale or purchase package those two up together.
And I wanted to just quickly elaborate on the cost for title insurance and what constitutes the price. So it is the assessment by the county, but is it also the recent sold price, or how do you figure out the title insurance price?
So title is actually calculated by the purchase price or the refinance price. So it's not actually by the appraised value. That doesn't really go into effect at all. So if you put a property under contract and it's $10 million, the amount of title insurance, assuming you get coverage for the whole part in the owner's policy, you're getting a $10 million policy. So that would cover the entire portion, because that's what the purchase price is. You have to remember the reason you get that full coverage is because in the instance where you have a total loss of your investment, if something comes back where it turns out the person you bought it from didn't actually own it and didn't have the right to sell it to you, well, the person who did rightfully own it has to get their property back or has to be paid to settle, in which case the property has been valued in the fair market at $10 million. And so that's the amount that you could potentially lose if you had purchased something from somebody who actually didn't, if it went through the process and no one caught that there had been an issue, it would be a $10 million claim against the title insurance company. So that's where the market, it comes down to either the purchase price, the amount you pay, how much you're ever developing it for, or the refinance amount from the lender.
Quick question there. So when you have the sellers and the buyers policy, usually in transactions in a very competitive market, does the seller pay for their own policy and the buyer pays for their own policy? We know in real estate transactions, for example, the seller is who pays for both buyers and the seller's agent. But what happens in a policy situation?
So it actually depends on the state. In Texas, for example, it's customary for the seller to pay for the owner's policy, and then the purchaser will pay for any endorsements, which are added on coverage that their lender is usually requiring, and then they'll pay for the loan amount as well. So it kind of gets split out, but most of the cost is shifted to the seller. Now, there are many instances we still see where, as you mentioned, because of the competitive market, the buyer is really pushing hard to and wants to use their title company. Sometimes they will pay the title premium because they want to use the person that they know and trust. But in other states also, it is very much up in the air on who pays for the title insurance. It kind of goes back and forth, and all these things, while they are negotiation points during the transaction, each state has a cultural norm, if you will, for who traditionally pays. But I wish there was a more cut and dry answer, but it's not as easy as this is exactly who pays what every single time, because it does change.
Right.
Got it. And now, if the prices don't really change, for example, in your state, if the price is set in stone and every provider has to go by the same ratio or the same price, how do you compete? Like how does a business like you, how does it work? Is it mainly sales and marketing? Like how do you compete in a business where price is flat across the board?
So there are, most states in the country are not set rate states. Texas happens to be one of them, and the rates are set by the Texas Department of Insurance. So in Texas, we are winning business for a couple of reasons. And the way MBL, how we win business is really twofold. Getting back to the underwriters that I mentioned previously, we have more underwriting options to go to solve problems. So oftentimes every deal has some complexities with it, right? Most things are not cut and dry, clean, and easy every single time. So having a number of different underwriters allows us to go to those underwriters, and people forget, they think of it sometimes as a commodity because, as you mentioned, the price is set. They assume everyone's going to look at it the exact same and their policy is going to come back the exact same. But this is insurance after all, and we are talking about a determination of risk by these underwriters. And so we work with our underwriting partners on determining what risk level they're willing to take. And some of them are willing to absorb more risk and make it a smoother transaction without going through all these hurdles that maybe another underwriter will. So from that sense of having more underwriters to go to, that's one way we win business. And then the second way is, just as you mentioned, August, is we have who we think are some of the best attorneys and commercial closing attorneys in the entire country. So our people are extremely sophisticated, are really good at working with buyers, sellers, all the council members, everyone involved in the transaction. They're just extremely sophisticated people. That's not the case. You don't have to be an attorney to close deals, but we just feel like it makes for a better closing experience because they're more sophisticated. So that's really where we add value in the transaction and making things easier for our clients. It's important to mention, because Texas is set, most other states are what are called file rate states, and those are roughly 40 of the 50 are file rate states. And what that means is every year, each insurer underwriter will file their minimum rate. So they say for every $1,000 in coverage, this is how much it's going to cost for title insurance. That's the bare minimum you can charge. You can charge more than that, but there is a fluctuation in price. And so in some states, if you go to some of our underwriting partners, First American, Fidelity, Old Republic, Stewart, if you go to each of those, your price will vary actually. And so some people in those instances could pay more, could pay less, but there is a set floor for what you have to charge title insurance in those file rate states.
Just going back to Texas again. So the price is a par price across the board, but the service is different, where now the onus is on you guys. If you make a mistake and there is something on title, the buyer or the seller are off the hook, and it's you guys have to recoup that. So that's why people are buying insurance. But you're saying that it's more about the process, the underwriting. It could be done quicker when the transaction takes place in lawyers' communications. Is that what you were?
So at the beginning of the, taking aside after the policy is issued, and if there were any claims issue, that stuff is kind of a set process that happens at a very specific point in time if there is an actual title claim on the insurance policy. What I'm talking about is, let me real quick, this will make it a lot easier. I haven't walked through the entire process real quick. So you guys are put a multifamily property under contract, right? At this point, we will receive the contract. We will go back through basically all public record on this property, on this tract of land, and pull everything that's a public record. Could be liens, could be anything that affects it, easements, right? You have water lines, you have electricity lines that could be built, anything that affects it. And then we will put together what is called a title commitment. The title commitment then goes out to all the parties. It basically lists 3 sections. You have Schedule A, which is your property description, land lines, everything that actually is the formal description of the piece of property you are subject to purchase. Schedule B are your exceptions, which list out things that we are not covering, we are accepting to. So, example, if you guys put a property under contract and it is of public record that they could run a power line straight over the top of your building, if the state electricity board comes and decides to actually run that electricity pole right over your building, we're not covering it because you knew about it before you purchased the property. That was of public record. So that is a Schedule B item that is listed in public record, and we are just making it known to both parties really that it's out there. Schedule C.
But you have to mention it, even though it's public record in your report.
Yeah, well, that's our purpose really, is like, we are not coming up with these facts out of thin air. I mean, the only job for us is to discover what is of public record, do some research on the property, and present that information so that both buyer and seller have an understanding of the property that they are supposed to be transacting on. So that is one of our key roles, is determining what's out there and making sure people are aware of that. So that's the Schedule B is a very important section. Both sections are very, very important for different reasons. And then you get to Schedule C, which are items that must be taken care of in order for us to issue the title policy as laid out in the title commitment. So these are things, you always have to, prorate taxes. You have to take care of the tax bill. You have to do, you might need to show entity docs. There's all of these things that you've probably seen throughout the process of buying and selling properties, where you have to show certain things to make sure, again, that you have the legal authority to do it, that you have all the signatures, all of these things that go into making sure that we have all the information we need to produce that title policy. So that's the process. And then once you actually close, you will fund your money into us. We will distribute it to the parties, the sellers, and all the people that as it's laid out in the contract. And then
that's only if you're representing us on the escrow side, right? Or no?
So the U.S. is different in that and each state does it a little bit different. If you go to California, title and escrows are split. They have to be split into two separate entities. In Texas, we are title and escrow. The same person that is handling title is, the same group is also handling your escrow, is also handling both that. So we think it's easier because it's the same office, it's the same group of people, it's all cohesive unit that's handling both your title stuff and your settlement statement and your disbursement of funds. So that makes it a little bit easier because it's not, you don't have another party involved that's, a bunch of other people.
And that's regulation. That's not a choice you guys have made, that the two.
I guess you probably could be a standalone escrow office, and some people do for like M&A transactions, but oftentimes in our space, in the title and escrow space, everyone that's set up in the state of Texas is set up to both do title and escrow, because it just, again, it makes it much more easy for people.
Please keep going. So you do the distribution.
Yeah. So we'll distribute the funds, and then I forget the exact amount of time. I think it's 30 days, maybe 60 days to produce the actual policy. You still have the policy. It's just has to be produced and sent to you and signed and everything like that. But it's still, the coverage begins as soon as you close. And that policy is sent to you, and then you should keep it on file. And then if anything happens where there is a question regarding ownership in the property, anything that comes up, if someone comes to you and says, hey, you guys developed on the corner of my land, you need to pay me for it, because that was my land, that little acre or that little parcel over there. Well, then you come to title. That's where we get involved. Or we have someone again who comes back and says, hey, my husband sold you that property, but we weren't, I didn't sign, and we weren't officially divorced at the time of signing, and I never signed any documents. That's gonna be a big title issue. So, I mean, those are small issues. It could be survey issues. There's a whole host of things that people, oftentimes when we joke about how much fun I get to have on my job with meeting a whole bunch of people and going out for a lot of lunches and dinners, and I could write a great review about restaurants around the country. But the importance of title, I can't stress this enough, it really is locking in your value and your equity in the property that you're putting money into. You can go in with certainty that if something happens, you have that title policy that will protect you and the amount of money you've put into that property to purchase it. And that's a really important thing. It's one of the reasons actually that real estate has been so resilient over the years, is because we have an instrument that allows us to ensure the value of what you've paid for it, at least on the ownership side. Now, it doesn't mean the market won't go down and that people might not pay the same that you paid for it, right? Because just the market swings, but the amount you put into it can never be taken away because of an issue with an ownership issue, basically, from a title perspective. And that's a really important thing that people, I think, should pay attention to, and really want someone quality on the title side helping them out.
Talking about all the issues that you brought up, and I'm stealing your question, Ava, I'm sorry, but I have to hit it up right now because there's a few other questions you're working on. Is that, do you have any data on, as far as the issues that come up, what is the rate that, the insurance that you sell, like I'm sure car insurance company, life insurance companies, they all have these stats that, hey, 98% of the time, the person is not going to die by that age that we're guessing that they're going to pass away. With you guys, do you have any data on how many of the insurances you sell on title come back with some form of delinquency or litigation or some form of caveat that now you have to deal with? Do you have any stats on that, or stories you can share? Recent stories?
Yeah, it's a little loose probably, but I've heard that 4% is probably the claim percentage across the entire country for title insurance. If you look at that compared to auto or home, it's a lot lower. But what I will say is, you have to remember, we're talking oftentimes, especially on the commercial side, I mean, we could be talking about a $250 million building. So there are, I didn't thankfully have this, but I've heard of people who have developed buildings, and the surveyor, again, kind of messed up one of the corners, and they ended up developing a very large building, and it was 1 square foot that they had gone over the property line. And so they had to take that 1 square foot, the value, all the way up the building, and pay off, pay off the person whose property.
Survey comes in way after the
survey comes in before. Survey comes in before, but again, the survey process comes in if it's already established.
It's part of for you guys require a survey to take place when a transfer is taking place prior to the transfer?
Survey is not fully required, but oftentimes the lender will want survey coverage. And if you want to add the survey coverage as an endorsement, you obviously have to provide a survey.
Got it.
Right,
And
right.
We don't have that
now,
here. We don't
the
have that here in
development stuff is
Canada.
different when it's land, and that's a much different story than what you guys are most of the time dealing with. But yes, there will be a survey most of the time. Sometimes it has to be updated if it could be a 40-year-old survey. This is actually interesting. It could be a 40-year-old survey, but if it still is as built and it still represents the dimensions as they are in current day, we can use that survey as long as it meets certain specifications. If it doesn't, if a little shack has been built on and there's other buildings that have been added, we're going to need a new survey because the dynamics of that that asset has changed.
That makes sense. Now we syndicate deals. We put a property under contract. What happens when in a case where the earnest money goes hard on day one? Like, when do we get the title insurance involved?
That's a great question. And there's really no hard and fast rule. I always tell people the sooner the better. It depends where you're interacting and where you're transacting in. In Texas, for example, our cost of pulling all that title commitment and getting that all together is free. We get it. You pay for it when it closes. So if you are working under good faith, expecting something to close, and we start pulling the title commitment as you guys are drafting the contract, and it gives you an idea of what is out there. I mean, it very well could come back and have an issue on there that you no longer want to proceed with that property. Now, we hope that doesn't happen, but it is an information tool that you can use as you're working through putting that building under contract. Some people wait until it's under contract, and then it comes to us. We pull the title commitment in usually 3 to 5 business days, turn it around and send it out to all the parties. So it also depends on which county and state you're doing work in terms of timelines. Sometimes the more rural you get, the longer it takes for title commitments, because you have a smaller pool of people in those counties that are in what are called title plants. This is a weird term, but they're called title plants because back in the day they used to have all of the recorded paper. And there was so much paper, they called it a title plant because they come from trees. So it's called a title plant, and they have those all over the country in different counties. And some of them are privately owned, and some of them are publicly owned. So again, probably too much detail, but it's a fascinating kind of look behind the curtain of how things are done here, because it's kind of weird. It's a little different, but it also is extremely important.
Yeah,
No, absolutely.
I love
now,
about it.
Talking about the journey again for an investor or a group, looking to bring on tens or hundreds of investors. Obviously, we have a fiduciary duty as general partners, and if anybody is going to invest with us in the future, last thing you want having any issues through any part of the process. But when should a group or an investor, let's just call it broadly speaking an investor, when should they engage their title insurance advisor when it comes to in that process, like Ava's question, where in a competitive market a lot of times there's deposit put and that deposit goes hard day one. Is it safe to say that as soon as the deal comes across your desk and you send out the LOI, engage the title insurance specialist?
I think, it goes back also to the attorney you're working with and how they draft the contract, because oftentimes we'll see, even if there is hard money day one, there is a stipulation in there that this money is hard unless there are title issues. Now, that's kind of a broad, vague term. I mean, there are title issues. It just depends on the severity of them. So we do see that sometimes, but that could go to litigation because the other side might say, no, that's not a real title issue. We're keeping your funds. But yes, I would say it is just like you guys, we are a fiduciary. We don't act on anyone's behalf. We are simply there to interpret the contract as it is written and produce these documents that are of public record for both sides. So we don't have a dog in the fight. We're just interpreting the contract. But the earlier, yes, as you're working on something and putting it under LOI, it's always a good idea to have a partner that's starting to work on that for you. Great.
Last question here before we move to the next segment of our show. It's not really a question, it's more of a comment. I want to blow everybody's mind. Let's get to the
10 champion. Go ahead. The next segment of our show.
The next segment of our show, the fun and exciting stuff. If it wasn't exciting enough for you guys now, let's have some fun now.
Here we go. The 10 championship rounds to financial freedom. Lee, are you ready for this? Whatever comes top of mind.
Let's do it. Okay,
let's do it. Number one question. Who is the most influential person in your life?
I mean, definitely my parents, for sure. Growing up, both my parents were doctors and very well educated, very smart, very driven, gave me every opportunity I needed in life to be successful. And without them, I definitely wouldn't be where I'm at today.
Beautiful.
God, I was gonna say the apple fell far from the tree in this situation, but he married a doctor, so
That's right.
he
That's
made
exactly
up,
right.
he made up for it.
Oh, geez, August. Okay, here we go. Lee, what is the number one book you'd recommend?
Well, top of mind, I'm reading, I'm a big golf fan, and there's a lot, if you've been following the world of golf, is somewhat in turmoil currently. So I would highly recommend if you're interested in everything that's going on, and also just a great autobiography or a rather biography from Alan Shipnuck about Phil Mickelson currently that kind of delves into the Saudi stuff that's going on. Also has a lot of information just on Phil's legacy in golf. So very good book especially if you're a golf fan.
Awesome.
You said all the Saudi stuff that's happening. There's a Saudi connection to
We
golf.
got too much. Yeah, we could go on. We could do a whole other podcast.
Okay, got it.
We can get into that at a later time. Yeah.
All right. Okay, Lee, if you had the opportunity to travel back in time, what advice would you give your younger self?
I think I would say enjoy the moment, because I think it's one of the funny things as we get older and we get a little bit more established and maybe make a little bit more money is we still have those memories of the times when we were dirt poor, hanging out with our college buddies or buddies somewhere. And those are some of the best memories you ever made. And you wish you'd go back and enjoy them more. And, life is not about the money, and it's certainly not about getting somewhere. It's about the journey of getting there. And so enjoying that journey, even though there are difficult things along the way that make it uncomfortable, that's what makes life enjoyable, and it's the people you're doing it with. So I've tried to really focus on that recently, and I just tell my younger self to really focus on the journey.
Amazing.
I love that. Awesome, Lee. Okay, what's the best investment you've ever made?
Real estate. It's been a good market so far, and we'll see how things are rapidly changing here. But the real estate investments I've made, both in multifamily and industrial, have done very well. So I love the real estate sector.
Awesome. Okay, now what's the worst investment you've ever made, and what lessons did you learn?
Single stock picking. I'm horrible. It's like I'm like one for. I don't even have that many individual stocks, but I have a very good knack of buying at the top and waiting to sell at the bottom. So it's single stocks are not my bag of tea.
All right. Makes sense. Now, next question. How much would you need in the bank to retire today? What's your number?
Probably say probably 5 million. You give me 5 million, I'd probably be good. I mean, that's, as long as I can play some golf, hang out, we're both healthy, you can travel. I'm not you don't need too much. Some people need, 100 million. Give me 5, I'm good.
All right, perfect. Okay, if you could have dinner with someone dead or alive, who would it be?
I think any of our early presidents, George Washington, Abraham Lincoln, I think their perspective also on, just what they went through and the difficulties that I think are going on in politics these days, that you'd realize that politics has always been very, very difficult, and their stories from especially war and Civil War and all that stuff would be absolutely fascinating to listen to.
Getting assassinated over their beliefs, so that's
Right. Okay, if you weren't doing what you're doing today, what would you be doing now? A famous golf player?
No, I wasn't. No, I honestly, I never thought I would be anything other than a TV sports anchor. So even though I've already done that, I gave up I saw my parents as doctors, and I never wanted to go down that path, even though, as Alex mentioned, I married a doctor. So it didn't fall too far from the tree, but I absolutely would be back doing sports journalism again.
Super cool.
amazing.
Super cool. Okay, Lee, book smarts or street smarts?
No, street smarts, not even close. Don't put a test in front of me. It's not, I'm fine. I'm going to get by. I'm going to pass. Way more street smarts.
Awesome. Okay, last question. If you had $1 million cash and you had to make one investment today, what would it be?
Real estate's what I know. It's what I trust. I'm smart enough to know I'm not the GP, in a GP role, but I know a lot of very smart people who are GPs, and so I'd be very happy to find some good investments and hang on for the ride in real estate. Stock market would be, all the other stuff I don't understand and like as much, and so as Warren Buffett always says, invest in what you know. And for me, it's real estate, so I'll stick to that.
And you're in the know because you're right there in the trenches with all the GPs and investors. So, people should come to you when they want investment advice when it comes to real estate. But hey man, really appreciate it. Thank you for being with us here today. We know we're just a couple of minutes away from our deadline, but go ahead.
Lee, what's the best way people can reach you?
LinkedIn is great. You can find me on LinkedIn, and you can also mbl-title.com. You can see our company, and my bio and all that stuff is up there. And if anyone has any questions, please feel free to send them my way. Always happy to help.
Lee, it was incredible seeing you again.
Great to see you guys again. Hopefully I'll be across the border sooner than later, and let me know if you come to this side as well. We'll have to get together again.
We're coming your way. We're coming your way.
Good.
Thanks.
See you guys.
Bye.
Yeah, bye.
Thank you for joining us for this episode. We hope this conversation enlightened you on how to win big in this highly profitable and risk-averse space. Get on your feet and embrace this world that offers so many opportunities just waiting for you out there. Continue your journey to becoming a savvy real estate expert by subscribing to the show at cpicapital.ca. Don't forget to leave a positive rating and share with your friends. See you on the next one.